Hello and thanks for joining us with this episode of the GrowVC Everyone Funding Startups podcast. Today we're talking about the funding sector, venture capital, and how this field has developed and how it will develop in the years to come with all the innovations that are shaping our world. I'm your host Marcus, and I'm here with David Hornik from August Capital, as well as Valda from GrowVC. Let's look at our member highlight from the community for this week's episode, and that's a startup called LoveIn Lon. The startup aims at connecting people that share brief romances in very casual places. You can follow their progress in our community or on ilovelondon.net. That's love spelled L-U-V. There you can also see their online social community that spreads those messages. Okay, let's get back to our guest. David, we're happy to have you on our podcast. Would you give our audience a short introduction to who you are and where you've come from?
Sure. So I'm David Hornik, and like you said, I'm at a firm called August Capital. August has been around for 15 years, and there was a predecessor firm called TVI, Technology Venture Investors, who sort of existed before August, and two of the partners who formed August had been the partners at TVI. And we're pretty traditional early-stage venture investors. There are 6 partners at August. The partners at August were the earliest investors in Microsoft, Sun, Compaq, Intuit, Symantec, Seagate, Xilinx, more recently Skype, which we're on here. So we like to look for really great teams doing things that we think are disruptive and interesting. But we're focused on helping support great entrepreneurs in what they do, and I view that as my role in the venture business.
Venture capital can be somewhat of a mysterious area for entrepreneurs. What would you say are the basics of venture capital?
I mean, there's sort of lots of different takes on it. I mean, the problem with the venture business is that it is this curious profession. When I have to go find on a survey where I fall, I almost always have to put myself in financial services. And I think that sort of misses the point, right? I mean, venture capital is really a business about understanding technology and technology trends. It's about finance to a point. It's about corporate governance. I have a legal background, so I think that the law actually plays a role periodically. But if you had to ask me what I thought was the most important skill and the thing that's most implicated, I'd say that it's psychology and sociology. It's really about finding great teams, helping them to thrive, trying to make sure that roadblocks don't get in their way. But the venture business is a pretty simple business. It's basically we raise a fund of money from a set of investors who invest in us. They say, "Here's money. Why don't you go find interesting things in which to invest our money?" And then we hope that the value of the things in which we invest goes up. And so the venture business is really a buy low, sell high kind of business. The only thing is that there's this incredibly complicated and tricky and fun but challenging business in between, which is startups. The business of startups, and that's what we're investing in.
Right now, we find ourselves in a peculiar economical situation with the recent economic crash, which has undoubtedly affected every single business in every single country. How has this affected venture capital?
The venture business as a whole has been hurt like everything else, and I think that it has been challenging to invest in startups over the last decade. There has not been a lot of liquidity in any event. There haven't been a lot of companies that have gone public. There haven't been any a large number of significant M&A outcomes, and so what's happening in the venture business is that outcomes are really stretching. Even companies that are successful, it's taking a long period of time for them to get liquid for there to be an outcome, whether it's an M&A outcome or a public offering, et cetera. And so it's challenging the returns on the venture business as a whole. And I'd say that a huge percentage of the venture business is finding itself in a position where it's not delivering the kinds of returns that people are looking for. So I think that there will be a lot of pressure on venture funds to either not raise future funds or figure out how to continue to grow their business, despite the fact that there's been a ton of pressure on the venture investors of late.
Let's take a brief look at the future. With all the innovations online, disruptive initiatives such as Kickstarter, Kiva, GrowVC, why not? So how do you think these will impact financial structures and the venture capital industry?
I guess it depends on how you look at it. I have to say that I am not a believer that the fundamental structure of the venture business is under a huge amount of pressure. I think that the venture business has grown to a size that doesn't make sense. It's outgrown the scale of the sort of grand opportunity for venture investing, and so I do think that there'll be a contraction in the venture market for sure. And of the however many thousand firms that exist, some significant number of them will stop operating over the next decade. And I'm thrilled to see things like Kickstarter and Kiva and these angel venture funds, etc., funding interesting startups that are just getting going, because the reality is that the venture business isn't about that initial phase in many instances. The venture business, as I often invest, is about finding those companies that have the opportunity to break through, build big independent businesses that disrupt current market conditions, etc. And there will always be a market for venture investment in those companies. If you look at Facebook and Twitter and Groupon and Zynga and you name the company that's feeling big and disruptive and interesting, they've all raised a ton of venture capital, right? They all have, they all will, because it turns out that once things start working well, then that's when you need more money, and you need more money because you want to accelerate the business. You want to grow what you're doing. You want to continue to be continue to expand on the opportunities you have. And so I feel like the venture business has always been about that. It's been about how do you fund entrepreneurs who have opportunity that's larger than their capacity to make the capital that is required to build those businesses.
GrowVC has always been about the entrepreneurs, getting to the grassroots level where they need a relatively small amount of money to get their businesses started, especially if compared to venture capital funds and the amount of money that you guys invest. So there are definitely opportunities. But wait, what do you think? Do you think there will be big collaborations between these grassroots initiatives and venture capital firms?
Valter, what do you think? I think we have to be, right? I think it has to be. I think that there's been a whole lot of hoopla about this kind of super angel versus VC business. I personally have been involved in a number of these quote unquote debates, and my message always is that this is a collaborative process. That company building is a collaborative process, and maybe there's an opportunity. Yeah, it's true that every so often companies grow quickly, et cetera, on that first round of capital, and so the real exciting opportunity was get in early. But I think as a general matter, the opportunity is for folks like GrowVC and the venture community to work together to help build big companies in the long run.
Yeah, I definitely agree on that kind of vision. Is what we are trying to do in the very early stages. It's kind of the situation that there's so much kind of innovation and ideas that maybe dry out too early, and we think it would be better to give more opportunities to more teams to be able to move forward, and then maybe they can be micro mergers with some teams, like even in Y Combinator, the teams inside there, they find new team members and such, but just more innovation off the ground, moving forward, and then activities happening. But when they hit that kind of really fast-paced track and growing, that's the normal kind of the venture capital is applied, and it's the most kind of area where the existing models work well, and naturally then there's the whole other segment of ideas that you just can't get off the ground with little money, that are not, obviously, if we think about web and mobile startups, that's the money really is